My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends, just trying to make you some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Nobody liked PepsiCo going into today's earnings report. Stock falling 20 points from its high, based on worries about competition, high commodity costs, the usual litany. Then this morning, PepsiCo, yes, later Frito-Lay, Gatorade, Pepsi, reports an excellent upside surprise. Without any gross margin degradation to speak of. And what happens? Well, the stock roars higher, up 4% on an otherwise pretty much sedate day, where the Dow dipped 28 points, the S&P lost 0.33%, and the Nasdaq declined 0.09%. It turns out PepsiCo's raw cost liabilities are only a few months from turning positive. Headwinds going to tailwinds. Remember, Pep has longer-term contracts for commodities that are just now rolling over, something that will give them a huge earnings boost. And you know what? This got me thinking. Maybe the bear market is kind of maybe growing too long in the tooth for some companies. Isn't that what happened with PepsiCo? We've had tremendous interest in the food and drug stocks of late, which are pure recession plays. We've seen upgrades at all the usual staple suspects now. Merck, Kimberly-Clark, AmerisourceBergen, McKesson, Cardinal Health, Humana, UNH. They're always on the move these days. Time-honored recession stocks make sense. Merck inked a new deal with Moderna to develop specialized cancer vaccines. I, frankly, would rather buy Moderna off that. Atlantic upgraded Kimberly-Clark, basically saying, it's enough. I mean, how low can it go? AmerisourceBergen, McKesson, Cardinal, they're all drug middlemen. Consistent earners, not unlike Ralphie from The Sopranos. As for Humana and UNH Health, you can't live without them. Well, more specifically, you can't afford to get sick without them. Just wait till you're my age. Believe me, I tried to figure out how to deal with Medicare and ended up paying a fortune so someone else could figure it out for me. All I know is I pay Humana for all the stuff I used to get for free before I turned 65. Then again, turning 65 is better than the alternative. But back to PepsiCo. In this business, our goal is to find stocks where expectations are low and Wall Street's written off the business as an inflation roadkill, just like Pep, until this morning. So after I read the quarter and the conference call, I had a brainstorm. Why not sit through the S&P 500 new low list? That's right, the new low list. The neighborhoods where all the dreams are broken. And take a good look for the next PepsiCo. Now, there's certainly a lot to choose from. The S&P's down almost 25% for the year. We've gone 11 months since the bear market began. Average bear market only lasts for about 13 months. So maybe we have an expiration date coming up, and soon some of these are going to pop. Hey, maybe that sounds crazy, but did you expect PepsiCo to explode like a shaken-up can of Mountain Dew today? Probably not. I took a look at yesterday's S&P intraday new low list. There were 59 names, gigantic number of fallen angels, because this is one of the most horrible moments I can recall since I got in this stock business in 1979. There's lots of miserable companies on the list. I mean, do you want to pick up some ATT? Maybe this is the quarter they right the ship. Don't hold your breath, though. I think it might be too early to buy Intel. They're about to lay off thousands of people. Usually the next quarter won't be that good either. If the U.S. is blocking our semiconductor equipment companies from selling to China, I'm going to take a hard pass on KLA. Teradyne, too, especially after Brethren Applied Materials just blew up this very evening. Charter Communications, the cable company. Do you know this thing has $88 billion in debt? That's like the debt of a fairly large country with rapidly diminishing tax revenue. Call it Fredonia. But then we have a host of companies on the new low list that seem down on their luck, but may not stay that way. With rates this high, do you really want to throw out KeyCorp? Yes, KeyBank with its 5% yield. Are you supposed to give up on both Bank of America and J.P. Morgan with their massive deposit bases at a time when their loan losses are tiny and their credit balances are gigantic? Remember, most people are getting next to nothing on their savings, but the banks can invest their money in treasuries at 4% legally without getting in trouble with the regulators. Hey, by the way, the banks did exactly that in 1990, and it made a killing for them. I think it happened again. If you're a new CEO and you don't know what tech you need, you know what you do? You call a company called Accenture. This company's the gold standard for consulting. Yet, there it is, a puny little discard, as they have nothing going for them at all. I find it astonishing that they're on the new low list. I know ServiceNow didn't exactly blow away its last quarter. It just had its usual excellent one. It must kill Bill McDermott that his stock's on the 52-week low list. Go read his book, Winner's Dream, A Journey from Corner Store to Corner Office, and then ask yourself if he'll let this stock continue to roll over and play dead. I don't think so. I don't know which will turn first, Domino's Pizza or Yum Brands, but both are well-run companies that are coping with food inflation and wage pressure. Let me ask you, if the Fed actually does tame inflation, and it sure hasn't yet, will these stocks stay down here? Isn't that how you have to think? We can't predict when the Fed will win, but we know they will beat inflation eventually. Is there downside in Domino's and Yum? Of course. But they've already made it to the new low list, for heaven's sake. It's not like you're catching them on the run. Let's not look Generac backs up your house and you can store electricity in it. They back up the electricity because the grid is so awful, right? It's a necessity. With an electric grid that doesn't work well and the rise of electronic vehicles, how can you avoid taking at least a look at a Generac at home, if not the Generac the stock? Oh, this one's so low, I'm tempted to add it to the charitable trust. We convene for the investing club tomorrow at noon for a good talk. Members only, though. Next, I know this one's too early, but Stanley Black & Decker is a fantastic brand name. Honestly, it's one of the best companies I can imagine. Yet its stock now trades like it's finished and it's never coming back. That's crazy. This is everybody's go-to tool maker. If you ask people what's the best in tools, they're going to say Stanley Black & Decker. So should it really be thrown away like this? Yes, S&P Global's levered to security issuance, and that's arguably the worst business in the world right now than semiconductors. There's no PepsiCo here. But ask yourself, will there always be no IPOs? Is that the new normal, or is it aberrant? Anyone who says it's the new normal will be laughed off the trading floor, which is where we are, believe it or not. But aberrant? If you think so, then why not buy it? Next, the feds won't allow the phone companies to merge. They hate mergers, especially in industries with few competitors. Yet all the cell tower companies are on sale, including American Tower, Crown Castle, and SBA Communications. These are terrific, consistent companies with very good long-term growth. Finally, there's a really odd one, Mid-America Apartment Communities. This is a real estate investment trust that owns and operates multifamily apartment properties in the Southeast, the Southwest, and the Mid-Atlantic. We know that's precisely where housing is in short supply. So why the heck would you sell the stock of a company that owns some of the hottest properties in the country? I think that's just plain stupid. It's not like you're buying an office building REIT in Center City. Listen, I know I'm taking a shotgun approach here, not a more precise rifle. But the bottom line, I'm just trying to give you a more constructive perspective based on the prism of PepsiCo, a pathetic also-ran that suddenly turned into a big winner. And I think PepsiCo, by the way, is just getting started. Let's go to Maria in Pennsylvania, please. Maria.
Hi, Mr. Cramer. Thank you for all you do.
Thank you, Maria. What's going on?
My husband and I, we've watched you most every night, and we both had our own businesses, so we were investing on our own. So we really appreciate your direction and your instruction and all that you do. Unfortunately, my husband had an accident and passed away a year ago, so I'm on my own. And I inherited a lot of KMI, Kinder Morgan, from him. And my question leads to that is, it should be a good investment because we need pipelines and natural gas, but we're underwater with it, and it just seems to go between 16 and 19. It has a good dividend, but should I average down or cut my losses? What's your suggestion?
All right, well, first, let's get everything in perspective. I'm really sorry for your loss. It's kind of stunning, and I was, I'm kind of just thinking about that. Because you're such a nice person to say those nice things about me. It's very hard to do the show right now. So your trust in me means a great deal. And if you were here with me on the staff, you would know that I mean that. On the issue of the inheritance, Kinder Morgan's a very good company. It yields 6.5%. I think the pipelines are very good to own here. What I average down, I don't want you to put more money in a pipeline stock, but I do, again, extend my condolences, and it means a great deal to me that you turn to me every night, and I hope I don't let you down. All right, the point is, I'm trying to give a constructive perspective to the prism of PepsiCo, not like we just did on Kinder Morgan. And I just don't think that PepsiCo's an also-ran. I think that these stocks aren't either. On Mad Money tonight, we're continuing our third quarter recap series and digging into the winners and multiple losers in the NASDAQ. Then could Bolero be a strike for your portfolio? I'm taking a close look at the bowling chain / SPAC, a positive SPAC. after the stock's recent comeback. And Macy's is reviving Toys R Us in stores across the United States, and boy, is it terrific. We had a chance to talk to the company's CEO from the flagship store in New York City to learn more about the partnership. So I'm urging you to stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.